Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about swing trading, but why it's okay to lose sometimes when swing trading. We're going to be talking about a really good strategy that you guys can use to start making money. So I hope you guys all enjoyed this. If you guys do, hit that like button, subscribe, and if you guys want to learn more about swing trading, check out our school. It's absolutely fantastic. We talk about how to find these stocks, my strategies, my approach. It's a one-stop shop for all of your swing trading needs, and you guys can use code LEARN to get 50% off. So check it out down below. One spot left. So sign up down below. I'll see you guys in there, and let's jump into this here. So this past week here, we did take a couple of trades. We entered a new position. Now, the thought process here was very, very simple with the stock, ticker symbol EVL. You guys can see, looking at our trading journal, we're down on this trade about near and around $100. We're down about $100, which in the grand scheme of things is not that big of a deal, and we actually cut our losses with this one. And the reason why is, let's actually look at this here and break down why we cut our losses. So before we enter this trade here, you guys can see that the stock followed all of our checklists, had an upward trend, sold off down to a support line. You guys can see that 200-day moving average line, hit it, buying pressure, hit it, buying pressure, hit it. And actually, at one point with this position, we were up a couple $100 on this trade, and it slowly started stair-stepping its way down. So why we cut our losses was because of this. You guys can see it actually hit that 90-day moving average line and started selling off. So our stop loss was near and around the 515 area. So our entry was near and around the 519, exit 515. So we lost $4 per share, about $100 on the trade, and you guys can see it slowly stair-stepped its way down. One of the reasons I knew we were going to get some good sell-off is you guys can see the heavy support that this stock used to have from 5.7 near and around that 517 mark. Actually, if you look close, you guys can see right in this window, just look at all the buying pressure we've seen. Hit it, buying pressure, buying pressure, buying pressure, and then boom, this stair step below that. We exited the position here with just a simple stop loss order. So I didn't even really have to sell it. It automatically did, which is awesome. And it prevented me from losing more because it continued to sell off. And yes, this stock could easily find support and rally its way up and move its way up higher. But for me, it's always better just to cut your losses, move on to other opportunity. And that's exactly what we entered. We entered a position, ticker symbol AJG here. This position, it was a stock here that we recently called out, and it has really, really good potential. It has an upward trend, sold off down to that 90-day moving average line, which has heavy support for the stock here. The risk and reward was really, really good. If we go to the hourly, you guys can see that what we look for is the stock on an upward trend, sold off, and we find some sort of support on the hourly, and that's exactly what we did here. You know, the average cost on this trade, let's go ahead and pull up our handy dandy trading journal. Our average cost for this trade is near and around $282.50. So right here, we got in on the breakout above that 90-day moving average line. You know, and that's the thing, you know, with the other stock here that we were in on, we did not get in on that trade. You guys can see we got in for the future breakout. So I do think that's kind of a lesson learned, right? This lesson cost me $100. Maybe just be a little more patient, wait for that play to break out above it. That could represent a better entry, like ticker symbol AJG. We're already up pretty near and around $87 on this trade. It does have some pretty hard support on that 200-day hourly. It was undervalued on the RSI. At one point, it was at a 30. And the risk and reward, let's break that down because that's super important here. So the entry here at 282.50. Let's zoom out here. The stop loss that we could take here is near and around, at least I would do about 2%. I think that's fair. And for the potential up to about 300. So the risk and reward is about 3.47. So you're risking $1 to make $3. You're risking $100 to make $300. That's the approach here. And you guys can see that in the past, it has used, that 90-day moving average line as support. So I do see some great potential out of this stock here. Went small with it. We always can add more. Another position that we are in on is Ally Financial. Ally Financial here, is a stock on the hourly that, I think we're about to just exit this trade here. One of the main reasons that we are still in on it is it just continues to actually have, a general upward trend. And I know some positions have an upward trend and you can get some good sell-off off it. I just think that it's just a matter of time where we can get some good buying pressure out of this thing. The weekly chart here does look decent because it's on that 90-day moving average line and it just hit the 200-day. That's why looking at several supports, several time frames is crucial. And right now it's only at a 39 on the RSI for the weekly. So I do see some potential going forward with this stock here. And then, the thing about this right now is just in the general market, we're seeing just a lot of volatility. The S&P 500 is hitting all-time highs. It's very, very close. So, we're going to have a little sell-off. We're going to have people that are nervous to invest, nervous to trade. I never get worried or upset when stocks sell off or stocks crash. I always think, I'm willing to take a hit on a bad swing trade for the potential of it. My swing trades after a crash are always top tier because there's so much buying pressure, so much money getting pushed into the market. So for me, I don't get scared of opportunity, and you always can short positions. Shorting is betting for the stock market to go down, so that always is a potential there too. So I hope you guys all enjoyed this. If you guys did, hit that like button, subscribe, and if you guys want to learn more about trading, check out our school, code LEARN, 50% off, and we'll see you guys in the next one. Take care.